Hey, it's the Hatch Homes Group. Thanks for joining us for our Monday market update. And today we're going to talk about how the new variant is affecting real estate. We have all seen it in the news. It's definitely a concern for a lot of people. We've seen it in the stock market. So we're going to dive into that. First, Johnny, you want to take us away with some of our weekly market stats?
Of course. The average home price is just under $627,000. And that's going to be the greater Portland area, excluding condos. And then the inventory is still just under a month, with the most active price still being at that $500,000 to $600,000 range, with the average days on market just at like 68 days.
Yeah. And I'm glad you said that about like what that 620 is, because, if you Google average home price or whatever in Portland, you're going to get a lot of different numbers, and some of them include condos, some of them don't, some of them are greater Portland, some are just city of Portland. So speaking of, we're getting into our main topic about what's happening real time in Portland. John has some great stats. And John, that first thing, median list price, what is that?
Well, yes. The median list price is for the Portland area. So Portland address, and it's single family residences.
And condos, this number, right?
And condos, yes.
Yeah.
Single family
it's a little lower.
Condos, but it's a Portland area, not the greater Portland area. So we got a lot of high-end homes in there as well, but a lot of
condos.
Yeah. So the great thing about this picture here, this graphic here, it shows this thing we call the market action index, and we can see how the seller's market versus buyer's market is behaving. So we can see the arrow on this dial slightly increase towards the seller's market. So slightly better today than last month for sellers. And it's got this market action index of 67, where the index of 30 would be a balanced market. So it's well into a seller's market. But there are signs that it's improving for buyers. We're seeing less growth in the sales price. One thing to look at is average days on the market, 66 days. That seems to many people to be a high number, because people have seen homes selling very quickly in the streets, but it's the average, and what this report does, when we get into detail, it shows that in the lower price range, the days on the market is a lot less. It's like half. So it depends on the price range, and of course the particular location. And although this is a Portland summary, we can analyze this for all the areas in the Metro Portland area. So that's what we can do to help you.
Yeah, a good resource, definitely.
I do like to see that these price increases are really starting to kind of level off, and we're seeing kind of a plateau,
Mm-hmm. Yeah, absolutely.
Yeah.
So that goes into the other aspect of mortgage rates. Like, we've definitely seen mortgage rates change because of the new variant news, and really it's looking positive for mortgage rates. That's like the only positive thing from this new variant, right? Because the feds are looking for a less risky asset, so they go to interest rates and they immediately drop them.
Yeah. So
that helps your affordability, right? And we're going to talk about this one.
Yeah. And when we look at this graph, we can see there's a considerable effect. A small rise in interest rates has considerable effect on what you can qualify for, and as well as your monthly repayments.
Mm-hmm.
Definitely.
And so
makes a difference.
Yeah, the stock market's done some crazy things this week. We saw a huge sell-off, and then it gradually came back. and it's all to do with COVID. It scared the Jesus off the market and took a dive. But what happened was the stock market went down, people purchased bonds, and that helped interest rates actually go back down, because interest rates were progressing up, and they dropped down to where they've been for some time, around the 3%, depending on how you structured the line, the low 3s or high 9%. Still huge low, but we don't think that's going to stay. And there's more and more talk, there's more solid inflation happening, and there's more people are predicting that we're going to see interest rates sooner than later.
Right. And I just want to say that I think that this graph is showing a lot of volatility. And of course, everything seems pretty up and down and volatile in the stock market, in the supply chain, and everything that we're learning this year, these past couple of years. And the volatility of that, I think, really doesn't show up as much in real estate, because we're seeing prices kind of plateau or, smaller increases, as well as interest rates going down and slowly going back up, but not at a volatile level where it spikes like the stock market. So bottom line, real estate is still your best investment. And I think now is the time that you should buy an investment property, buy your first home. And we'll definitely dive deeper into that with you when you reach out to us and set an appointment. And every Monday when we do these updates.
Yeah. Can you imagine if interest rates went up as volatile as the stock market? Like, that would be so terrifying.
It would be scary. Yeah.
But yeah, if you want any of these graphs as well, we can just text us. We'll get them out to you, and we can talk to you a little bit more about, like how that interest rate can affect your monthly payment, as well as your lender can do that as well. But yeah, thank you so much. If you have any questions, of course, we're here for you. Text us, and we hope you have a really great week.
Have a good week.
Okay. All the
Bye,
best.
guys.